Welcome back. Mahanagar Gas is the management that we're going to talk to right now. The company reported a strong set of Q3 numbers. The volume growth was in line with estimates. The stock has surged 71% in the last 1 year. To discuss more on this, Ashu Shinghal, the MD of Mahanagar Gas, is with us. Ashu, thanks a lot for joining in. It was a margin-led beat this time around. Your margins almost at about 29% right now. On a quarter-on-quarter basis as well, things have looked good. Just wanted to start by asking you, while your peers have seen either a decline in volumes or margins, you have been able to do better than what the street was expecting. What led to this? And if you can tell us, what is the kind of trajectory that you hope to maintain in margins going forward?
I think the margins are healthy as compared to the last fiscal. And this year, Q3 has been good. And we expect that Q4 will be in the similar range, or maybe slightly lower than what Q3 has been. As you asked about peers and how we are doing better than the peers, that they're actually company to company it varies. And if you talk about IGL, there have been pressure of electric vehicles there, and the government policy is very strong, and some of the volumes have come down in IGL. On the other side, we have been taking several steps to see that the volumes pick up, and the pricing have been also on the lower side. So all these things put together, we think that the MGL is in the good space.
So can you give us a number on the margins? What are you looking at, say, in Q4? And also, last time you had upgraded your EBITDA per SCM guidance from 8 to 10 rupees to about 10 to 12. Given that you had a beat this time in your margins, would you want to scale that EBITDA per SCM guidance further?
Yeah, I think it will be slightly higher, because if you see the 9 months result, we are 13.5 rupees per SCM, EBITDA per SCM. And going forward, we expect it to be slightly, earlier it was we expecting 10 to 12 rupees. Now it may be 12 to 13 rupees is the range we expect the full financial year.
Mr. Shinghal, hi, good morning. Could you tell us a little bit about what kind of volume growth we should expect in FY25 overall company-wise?
Yeah, this year we expect around 5% growth over the last financial year. And the next year, we again think that 6 to 7% will be the numbers from current 23-24. Because several schemes which we have launched in September, October for conversion and new purchase of vehicles, some of it we have here. Schemes are there for bridging the gap between diesel or petrol vehicle and the CNG vehicle. So that will come into effect, and also the infrastructure is improving. We are building new CNG stations across the thing. New domestic connections are getting up. So we think that industrial and commercial again has been a good segment where we have added new industries in Raigad area. So we think around 6 to 7% will be the target for the next fiscal as compared to this financial year.
Mr. Shinghal, so volume growth will be steady, 5-6% as you say. What about, if you read some of the global stuff on natural gas, etc., there is a bit of a glut expected sometime down the line in 2024, 2025, right? How is that? How can that change dynamics for you here in terms of sort of pushing costs lower, driving more volumes? Is that possible? Have you seen that in the past, whenever there has been a glut? And when that happens, that usually lasts for a few years.
When you see a glut, it means the oversupply of gas, or
yes, oversupply.
That is conducive for the industry, because we have seen in COVID and the war era when the prices have shot up, and that has slightly shaken up the confidence of the transporters as well as industry and commerce. But last 1 year or so, we are finding that the prices are more stabilized. So in case oversupply of gas happens, and it's good for India, because India is importing more around 55% of LNG. So that sounds good for the country, and it's good for the CGD industry also as such.
Okay, all right. Hi, Mr. Shinghal. Always good speaking to you. So we got this volume growth of around 6-7% for the next year. Unison, that's the one that you all acquired, and I think the street was very optimistic. I remember, the street celebrated when you bought that asset. What is the contribution in volumes as of now?
Currently, it is around 1.1 MMSCMD against, 0.1 MMSCMD as against 3.7 MMSCMD of MGL. But in around 7 to 8 years, we think it will be more than 1 MMSCMD going forward, and we are assessing the situation. Recently, the regulator has given the approval, and all 100% shares have been transferred in the name of Mahanagar Gas. So we have had our first board meeting of the new company after our takeover, and we are assessing complete situation on ground. We will be more aggressive with capex investment, creating infrastructure, and seeing that the company's growth trajectory is bettered or maintained at levels of what we expect it to be.
Got it. Okay, all right. So that's about it. You've mentioned that in the past as well. I wanted to know maybe a near-term trajectory, but we'll take that. You're in the process of ramping that up from around 0.1 towards that 1 odd. What about your diversification strategy? You know, you have a collaboration for LNG stations. You're also talking about EV charging stations. Tell us, what is the diversification plan, point number 1, and how much capex have you lined up to diversify from your core business?
In diversification, few steps are being taken up. One is that we have formed a joint venture company with Baidyanath LNG for setting up LNG stations, and around 5 to 6 stations we are expecting to be set up in a 1 year's time. So that company is functional and running. One CBG plant, we are in final stages of concluding the concession agreement. Once that is done, then capex investment approval will be taken to the board for taking this project forward. It will be again a mega project for us. Related to the EV, we have recently announced acquisition of 31% equity in one of a startup company in Bangalore-based company. So that's a diversification which we have done very recently. And again, going forward, we will be looking into various opportunities which do come up, because again, we have been doing the core business of CNG and PNG and industrial commercial, but with CBG coming up, LNG station coming up, EV coming up, it is slightly diversified as a portfolio. We will like to consolidate that, and then going forward, we'll look for further opportunities.
But have you seen any change in market share? Are electric vehicles eating up the market share? Because the trend was very good up until now, but in the last couple of months in certain pockets, like say two-wheelers, etc., the EV trajectory has moderated or slowed down a bit. What are you seeing as the big trends? And if you can also tell us this 15% conversion to EVs by 2025 in Maharashtra that was announced in the draft policy, you think that is that could be a reality?
I think EV has got their own set of challenges, starting with the type of electricity which is being used to run the EV is mostly coal-based, so that increases the carbon footprint. The other part is the FAME subsidy, again, is the scheme will be relaunched. Third is the availability and high capex. And fourth is that two-wheeler segment does not impact CNG business at all, because CNG is not being used in two-wheelers, and maximum of EVs are run in two-wheeler segment, followed by three-wheeler. Now, even if some of the part of share is going into three-wheelers will go to EV, that is well taken. Nothing to say that it cannot happen, and it's going to happen over a few years' time. However, it will be more than compensated with the type of infrastructure CNG is creating in terms of commercial vehicles, buses, and other heavy vehicles which can run on CNG or LNG. So in that respect, we have our strategy well in place about LNG also in LNG's retail station in addition to CNG station. So that will be more than compensating. That's how the growth has been coming, and we expect the same numbers in at least 5 to 7 years' time.
All right. We'll leave it there, Mr. Shinghal. Great to have you with us here. Appreciate your time here on CNBC-TV18 as always. Thanks indeed. That's the management of Mahanagar Gas MGL. Stocks about 0.25% higher. Market, by the way, is